Hey, good morning, everybody. What's up? We're back again for another episode of the Mic Drop Show. Hey, this is where we bring clarity and structure to real estate and financial strategy. I think that's what we're all looking for, right? Is that financial strategy. I'm Mike Morawski, and I'm here every Wednesday morning at 7:30 Pacific. Yes, 7:30, 9:30 Central. This is where we take a closer look at the framework that actually can help protect investors and investors' investments and what they're doing in real estate. Regardless if it's on the single family side, the fix and flip side, buy and hold, multifamily side, or other commercial assets. We're talking about framework that works in all of those asset classes. So welcome this morning. Glad that you're here. Hopefully you got told about this show by somebody else. So if you're new, welcome. Glad that you're joining us this morning. We're going to talk about something a little bit different this morning outside of what we've normally been talking about, which has been creative financing and multifamily strategies. This one is for experienced passive investors this morning. So, hey, if you're a passive investor, if you're an LP, somebody who likes to put money in operations and deals and receive passive income, maybe call it mailbox money, whatever you want to call it. Or if you know somebody who is, go tap them on the shoulder right now. They may want to be listening in this morning. Or you know what? If you're listening to the recording, forward this on to somebody else. This isn't really this morning for people who are trying to get their first deal. Although, listen in, I don't want to eliminate you. If you're here and you haven't done a deal yet and you're thinking about real estate and thinking about getting your feet wet, well, definitely reach out. Follow me on social media. And, we're bringing good content, good ideas, good tips all the time. So just continue to stay engaged, especially if you have not done your first deal yet. But as I mentioned, this isn't for somebody just trying to get their first deal under their belt. But for those who've already placed capital in deals, they've seen some returns, they've seen some progress. Maybe you got fortunate, like some of the people I know that were able to top tick at the top of the market and get out and have huge returns back in 21, 22. Maybe you're somebody who's been in deals and you've seen pauses on capital distributions. Maybe you've been involved in capital calls, but you understand how syndications work and you understand how funds operate and how operators work. There's a shift that tends to happen at that stage when you understand, when what is actually going on in the market, in operations. There's a shift that happens. Your confidence can increase, right? You become more confident in your decisions. Should I invest? Should I stay on the sidelines? Should I keep my money in the stock market or traditional investing right now? Your participation tends to become more selective. And I want to talk to that this morning. A lot of times people overreact to markets and overreact to where we're at in a given part of the cycle. Sometimes it's caution, sometimes it's fear. But you have to take a look at your situation, where you're at, who you are, what your risk tolerance is, and decide whether or not you're somebody who wants to participate or not want to participate. There's different asset classes out there. It's not just multifamily. It's not just single family. It's not just self-storage or RV parks. There's multiple asset classes out there and multiple assets inside asset classes. So, not everything should be treated or looked at in the same light or in the same way. Don't take risk and look at risk the same across the table. The assumption becomes simple. If you're a passive investor, the operator handles all the risk. Not necessarily true. As a passive investor, you want to look at that risk and you want to take some of that on. It's a clean division, active versus passive, operators versus investor. And, I encourage you, if you are a passive investor, to be more than just passively involved. One of the things that we invite all of our passive investors to do is come to our asset management calls. Anytime you want to sit in and you want to listen how we're dealing with on the ground situations, how we're working with property management, you have the right to join us on any of those asset management calls. Just send me an email, send me a text. We'll make sure you have the link. But every week, in some cases, every other week, in other cases, every month, in other cases, depending on the operations of the asset, we're having an operations call with our on the ground team, looking at how properties are running. I actually have a 15-point checklist that we use every week going through our asset management calls of all the different things we look at. So if you're a passive investor, you're on one of our deals, reach out to me. We'll definitely let you sit in on those calls. As a passive investor, though, you're not managing the asset. You're still fully exposed. One of the things that we try to do for our investors is enhance a level of capital preservation, right? You become a member of an LLC, you come into our deal, and that LLC buys the real estate. Your investment is invested in that asset, right? In that brick and mortar. So, yes, in most cases, the operator makes all the day-to-day decisions, right? They structure the deal. They create the assumptions. They take care of the execution and the action daily and weekly. But as a passive investor, you have input. You can say something. You can jump in. You can make phone calls. You can talk to your operators. Don't sit outside. Be visible, right? Don't just sit back. Now, there's different markets too, right? And different times of the market cycle. And we're in the market cycle right now where we're at the bottom and we're going to be coming out of this. So for the next several months, you're going to have the wind at your back as an investor. There's a big misconception in the market that, or in investing, that who controls what and what the roles are, right? Understand that as a passive investor. Know the deal you're going into, what your role can be, should be, is. Over time, you start to notice where experienced passive investors really separate themselves from the less experienced. So if you're somebody who's new jumping into passive investing and you know other people that have done it for a while, why don't you ask them? Why don't you ask them how they operate, how they handle things, what they look at? Because there's a lot to be learned. So if you're a brand new investor, there's a lot to be learned by being a passive investor. I have several coaching clients that I work with that I coach them on how to structure deals, how to put deals together, how to operate, create, build syndications, buy their first multifamily deal. But I also encourage them to invest passively and to participate as a passive investor, because there's a lot to be learned on that side. It's not just how many deals you're in, it's how you evaluate that deal and step in. Less focus on project returns, investor decks, and market narratives, more focus on how decisions get made when things don't go as they're planned. You can have a great plan and you can really believe the math isn't going to lie, and you lay out these great underwriting models and you build a great business plan off the underwriting model and great budgets. But until you actually grab hold of that deal, jump into that deal and start managing that deal, things change. Allocations things change, budgets change, people change. This is a people business, and we're so dependent on the people that work on and in our properties for us. So it's about managing those people. Some of the other things that you may want to focus on is how the structure allocates pressure, not just profit. So how do we look at the pressure that comes up daily, weekly, and so that we can manage that profit margin? How transparent are the operators when the performance deviates? So, you create this great business plan, you roll out a great pitch deck, and you show it to investors, and you raise capital as a result of that. But as you start going down the road And, we're always great as operators to share great details, but are you great as an operator sharing when things aren't so great? How transparent are you with your investors as an operator? And as a passive investor, how transparent are your operators being? I know my partner and I, we tend to deliver as much information as we possibly can, weekly sometimes, always monthly, always quarterly. Our investors are invited to talk to us anytime that they need to. But this is where outcomes actually are determined. Returns get presented up front, behavior reveals itself. This is where passive investing tend to overestimate their position. They review materials, they ask a few questions, they compare a couple of deals. They really base their decisions on returns rather than transparency, operator history, mistakes operators have made. Hey, I've made several mistakes in the past and I've learned from them. One of the talks that I give publicly is what 5 things to look out for in a changing market. And that changing market can either be going down or going up. So they're the same things that you need to look at in both markets. They assume that things are being done right, that all the due diligence has been done for them. As a passive investor, make sure you're doing your own due diligence. And if you don't know how to do that, ask enough questions, and if you don't want to be in a group and ask questions, go to ChatGPT, use AI and ask questions. Boy, I'll tell you what, that is the greatest sounding board that you can have today. And, I spend time every day just in conversation with chat, right? Just asking questions, reframing things, asking how somebody else would look at something. And the answers you get back are phenomenal. But what most matters isn't just the pitch deck or even the standard conversation. It sits in how the deal is structured under stress. One of the things I love to do is put a stress test on every deal we underwrite. Every time I'm doing a deal, every time I'm underwriting, it looks great at normal operations, but what happens if the rents drop out? What happens if occupancy goes away? What happens if cash flow stops? Can the deal still perform? Can we recover? And that's what stress testing can do. And as a passive investor, that's what you need to look at. So without a clear framework for identifying that, it's easy to feel uninformed or to get really informed while you're still being exposed. Passive doesn't mean inactive, but it also doesn't mean protected. Don't sit on the sidelines. This is not the time to wait anymore. This market is changing. Are you going to be part of that change? I've been in the business over 3 decades, and I've said, boy, if I could just get in the market just before the market changes, and that's right where we're at. We're evaluating deals today. We're looking at deals today, and we're looking for passive investors who want to come off the sidelines and for the next several months have the wind at their back. So if you want a clearer understanding of how experienced investors evaluate operators, structures, and risk before committing capital, I'm having a premium episode of Smart Money Moves. I'm having a panel coming up here shortly in the next couple of weeks about unlocking the next wealth wave of passive investing. I'm going to have some great experts on, Michael Guthrie. We're going to have Travis Watts on, Clint Harris, people you may know, people you may not know, but huge operators and huge capital raisers. So make sure you join us. Each month for the next several months, I'm going to be doing a Smart Money Move panel. It'll be monthly. I'm going to have industry leaders who have knowledge, experience, and can bring that to the table for you to learn more and understand more. I'm going to be posting a link to join for free. The comments in the comments below. It's not just about choosing more deals. It's about avoiding the wrong deals. So look, if you're somebody who's thinking about becoming a passive investor, great, join us. But if you're somebody who has experience and done some passive investing, you're not going to want to miss this upcoming series. For the next several months, we're going to talk about smart money moves, what the smart money is doing. When we start to see huge institutions, huge hedge funds start coming back in the market, operators coming back in the market, buying assets today in today's environment, things are changing and about to change. When you see groups like Blackstone, when you see groups like Warren Buffett leads coming back in, buying assets, growing their portfolios, now's the time for you to really start to pay attention, come off the sideline. So join us. The link, as I said, is going to be in my bio for Smart Money Moves. The first one here, we're going to talk about the next wealth wave of passive investing. I'm going to have some great industry leaders on. But that's it for this episode. Call it a wrap, right? That's the Mic Drop Show. Remember, understanding is just the first step. Structure is what keeps you safe. I'm going to walk through the full context inside a free live masterclass coming up. So thanks for joining me. We'll see you next Wednesday at 7:30 Pacific, 9:30 Central Time. If I can help along the way in any way, don't hesitate to reach out to me. I look forward to catching you soon. Have a great day and a good week, everyone.